Hey, what's going on, everybody? Welcome to the mentorship. This is Mr. Richard, and today we're going to be talking about credit. I keep getting DMs, I get random questions, or I get people asking me all the time, "What is good credit? What does my credit need to look like? What is the credit profile? What is the FICO score? What is this? What is that? What is that?" I'm going to try to pretty much break down everything in credit in a nutshell, and hopefully, you kind of have a better understanding of what credit is and how it works. And then also we were going to talk about different credit score requirements for different things. So if you want to get a car, you want to get a house, you want a loan for business, you want to get a loan for investment, you want to get a micro loan, you want to get a community development loan, whatever. You want to get those type of loans, I'll break down all those right there. And then we're going to talk about business credit, right? A lot of people want to do like net 30s, net 60s, net 90s, trade line, NAV scores, index scores, and all that kind of stuff like that. I could talk about that a little bit, but I'm kind of going to tell you that it's not even like good to even work with. And then we're going to go over what's called a secret lenders list. Secret lenders list is the list of majority of all the banks, their requirements, their credit scores, and what how much they can loan you, which is pretty great stuff. So listen up. I'm gonna try to get through this as smooth as possible. Hopefully, I don't forget anything because I make this stuff off the top of my head. I got like two random words on a piece of paper down here as key points, and then I'm off to the races. So, credit score. What is a credit score? Credit score is the score that you get or the number that you get from the credit bureaus. And the credit bureaus is actually ran by what's called the FTC, the Federal Trade Commission, along with the Fair Care Act. So those two entities are almost like the mom and pops of the credit bureaus, right? And then their kids are the Experian, TransUnion, and Equifax, which are the three bureaus. It's actually five, but no one ever talks about the other two, right? But three main ones that I tell people to focus on is TransUnion, Equifax, and Experian. And a lot of times people come to me and say, "Yo, man, I want to do this, I want to do that, I want to do this." And the first thing I ask, "What's your credit scores?" And a lot of you would be surprised of how many people don't even know their credit score. They don't know how to find it. They don't know what's on it. They don't know anything about it. So first thing that you should do, everybody, almost a prerequisite, download the free apps, Credit Karma and the Experian. Download those two apps. They are free. You just got to fill out some information, and then they will give you your credit scores. Now, the credit scores aren't that accurate, but it's almost like you need Peter to pay Paul and Paul to pay Peter. Because I'm gonna tell you real quick that when you focusing on Credit Karma, the things on your Credit Karma report generally are accurate. However, your Credit Karma score isn't, because Credit Karma makes money by selling your information to credit card companies. I promise you, you get that Credit Karma app, you will get an email or a random text message once a month saying, "Your score got approved. You qualify for this card. Click here to see what cards you qualify for now," right? And instead of you having like a 600, they'll say, "Oh man, you got a 620, a 615. It went up 10 points. Now you qualify for a Chase Sapphire card, or you qualify for an American Express Blue card." And then once you click on it, you fill it out, you get the card, the credit card company sends them a check. That's how Credit Karma works. If something is free, more than likely you are the product. So think of it like that. Credit Karma, they solicit your information to get credit cards. Now, Experian or Experian, right? They what they do is they will send you notifications saying that, man, you had so many things, so many people trying to get on your account, or you had so many fraud alerts, or man, you had a fraudulent activity in your account. Do you want to get off credit monitoring service, or do you want us to watch over your file to ensure no one hacks your accounts or hack your credit cards? If so, we'll give you like $10,000 to $5,000 insurance policy or some shit like that. So That's how they make their money. They give you a score for free, and they sell you credit monitoring service. And Credit Karma sells you credit card offers. That's how they make their money. However, the scores are more accurate to me on the Experian app, but the inquiries and the data and the payoffs, the delinquencies, the repos, and all that kind of crap like that, that's on the Credit Karma is more accurate. So you need them both to kind of get a big picture of what they are. And then the bad part about it is if you get like a third party app like Identity IQ, Identity Score, FICO Busters or FICO Heroes or any of that stuff, like that score will be totally different than those scores. So, you know, you got to think of it like this. You almost have to go for it all and try to get everything off your credit and everything on your credit that is beneficial and everything off your credit that sucks. Right? So that's what you need to do. Okay. So I kind of harped on the credit stuff. We kind of have a grip on it, and you should be always watching it. You should be at least checking your credit at least once a month to see what's on there, and always be trying to get your scores down or up. So we'll go a little bit in detail about your credit. So whenever you get onto the Credit Karma app, which is easier for me to look at your Credit Karma app, you're gonna have 5 main factors. When you go to the Credit Karma app, you're gonna go to the credit area, and it's gonna say credit factors, and it should look like actually 6. First thing, payment history, right? And then you click on the payment history, and it'll let you know where you need to be at. Anything under 97% of payment history, your score is going to drop. You know, so if you're in like the 90s, 95, 94s, you got to start paying your stuff on time. You have a lot of late payments or a lot of missed payments. A credit report, a credit repair can alleviate or remove a lot of those things. Next thing we focus on is credit usage. To me, credit usage is one of the biggest factors. Credit usage will dictate how much credit of lines of credit you have out at any given moment. Okay, so the magic numbers is 9, 30, and 50. And I'll make it super simple. 100, say if you have $100,000 worth of lines of credit. If you are over 9% or $9,000, your score will drop. If you over 30%, your score is going to plummet. And if you over 50%, forget about it. Forget about it. You probably in the low 6, maybe high 5s, just off utilization. That shit can sway your points comically 100. Damn near 100 points. If you have a large amount of lines of credit out at any given time. And this is what's crazy about credit. It's almost like they want to give it to you, but you're penalized for using it, which is crazy. It's crazy. Why the hell would you give me something? Hey, kid, here you go. Here's a sucker. I want you to hold it, right? If you lick on that sucker, your teeth gonna rot out your mouth. Well, why'd you give it to me? Right? It's so stupid. But that's just the way the credit system works. So that's why I'm an advocate of trying to take that personal credit and convert it over to business credit, because business credit does not have a utilization penalty. So 9%, 30%, 50% don't make a difference. So like I was talking to a client earlier today, they got approved for 50 thigh wow, right? So if he wants to put 25,000 on it, cool. He want to put $30,000, cool. His personal credit will not reflect it. That's on his business side. Business side has no utilization penalty, only personal side. So never max out or use your personal side, convert it to business, have fun. Next thing. It's derogatory remarks. I say derogatory remarks. It's really like derogatory marks. That means late payments, charge-offs, bankruptcies, repossessions, all that kind of stuff. If you have any of those stuff on your credit, it it's it drops your credit score. And I'm not even gonna lie to you, they're bad, but they're really I've seen a person with a repossession that was closed have a higher credit score than somebody with high utilization. Think about that. It's crazy. Somebody with a $10,000 line of credit that used 6,000 of that 10,000, so there was a 60% utilization. Credit score was lower than a person with a repossession on their credit. I want you to think about that, because that utilization is a monster, right? The derogatory remarks aren't, I'm not gonna say ain't that bad. You should address all your stuff, right? So, I was actually talking to a client and he was like, yo, should I let all my stuff just get turned over or do a bankruptcy? And I said, well, first of all, bankruptcies are for banks or for businesses. They're not for people. So don't ever do a bankruptcy, right? You can, I shouldn't even say this. You can almost let it all default and have a whole bunch of late payments, charge the stuff off, then remove it off your credit, and it almost like it never happened. It shouldn't be like that, but that's just the way the system is. I'm not telling you not to pay your bills. I am just saying I just know how that system works. It is what it is. But you have a credit card, a $10,000 credit card that says $7,000, your score is gonna go to shit, right? But you can have multiple credit cards, late payments, and let them get charged off, and then remove them off your credit, and it's almost like it never happened. Versus trying to keep something at $7,000 that, I don't know. I'm not telling you not to pay your bills. I'm just saying it's kind of shitty. All right, next is age credit, however long you had your credit. So if you have some cards and you're like, yeah, I don't use this card, I'm gonna just cancel it. No, just keep it. I got a military BX card, 14 years old. Every once in a while, you go put a piece of some gas on it and then pay when the bill comes. Like, I don't care. 14 years is making my credit look lovely. Total accounts really don't make a difference. Credit age kind of don't really make a difference either. Hard inquiries. The more you have, the worse it looks. Anything over 5, it means you're desperate for credit. So never have more than 5. They fall off after every 2 years. This is crazy. If you didn't get the credit, it shouldn't be on your credit. So if you went for a American Express card and you got denied, you can get that removed off your credit. Shouldn't be on it. If you have the credit, I keep hearing conflicting things. All right, but if you have those inquiries, anything under 5, anything under pretty much 4 or lower, you're good, right? Try to have it below 4. And if you have more than that, you need to get those removed. The most I've ever seen was 75. I don't know how the hell you have like 75 inquiries in 2 years, because it falls off after 2 years on its own, right? And then sometimes people don't want to wait the 2 years, and I get it, right? But we can try to get those removed. Sometimes they do, sometimes they don't. A lot of that stuff in credit repair, it's almost like I'm at the mercy of that person. Sometimes they knock it all off, sometimes they pull none of it off. I know it's crazy. And also, too, another factor is, say if you have a weird spelled name, like I said before, in a class, I have a student, his name was Cornelius, and his name was spelled like 21 times, spelled wrong on all his applications, right? If they have misspellings of your name, if they have wrong addresses, if they have wrong social security numbers, if they have wrong next of kin, you can get, or whoever, or you have a spouse on there or ex-spouse or somebody you co-signed with years ago, you can get that shit removed. And if they have bad credit or they have some links to them that's bad or whatever, just get it expunged. Right? I looked at my credit shit like some years ago. It had like Ricardo, Ricky, Rich, rich. I'm like, who the hell are all these people? Right? Hey, I don't care. Take it off, right? And if you have like your name misspelled so many times, it makes you look like you're an unstable person. If you have multiple addresses in the last 7 years, if you have like a different house every 6 months, that's you're unstable. It's gonna make your credit drop. But if you have one address, one spelling of your name on your whole credit profile, your score is gonna shoot up. Right. So I pretty much challenge everybody on here now to go just review your credit. You should get a credit report for free, freecreditreport.com, and review all the name spellings and all the addresses. And I would try to challenge them. But moving on. Next, since we kind of know what credit profile or credit scores are, and a lot of people ask me, what's a credit profile too? Credit profile is just what your credit is made up of. There are some people have a low credit score, but they have no credit profile. They don't have any lines of credit. They don't have any credit cards. They don't have any debit, secure lines of credit. They don't have anything, right? So they don't have a house. They don't have any rent in their name. So credit profile and credit score, they just work together to give you an overall FICO score, right? You can have a strong credit profile and have a weak ass score because you have high utilization. So you can have a high score and a low weak profile because you have like a $500 gas card and it's at zero balance. I mean, that's a weak profile, right? I think the strongest credit profile I've ever seen, it was an individual who had $140,000 of personal credit cards in their name and they had zero balance. They had like an 832 score. I could do it, super strong. $150,000 worth of lines of credit. It's like, yo, I need business credit. Oh, yeah, you do. It's like, why the hell you got so much line of credit? Because I'm buying a whole bunch of shit and I'm in my personal name, but I'm buying it for my business. I say, oh no, oh no, oh no. We gotta get that converted over. Needless to say, they got hundreds of thousands of dollars worth of business credit because they had a strong credit profile and a strong credit score. You see what I'm saying? I hate to say you see what I'm saying. That's a verbal distractor for those who are really big into public speaking. But let's move on. Next is what can you buy or what should you buy or what can you get with certain credit scores? All right, so let's talk about it. So if you wanted to get a car, credit score requirements is about 600 on the low end, 650 for a higher end car or a more expensive car. So 600 is what you should be shooting for if you wanted to just get a car. So let's say you want to buy your first home. FHA homes are 580 credit score. Sometimes they go up to like 610, 620. It's crazy how you can buy a house with a lower credit score than you can buy a car. I wonder if they did that on purpose. Maybe like the system wants you to buy a house first instead of you buying a car. But nah, people don't do that. They want to be clean in the streets because they can't hide in their house. Yeah, I guess. Yeah. So if you're a veteran, I think one of the best perks, if not the only perk of being a vet, is you get a VA home loan. That is a 580 credit score, and that is 0% down. FHA, 3.5% down, and a traditional conventional loan is 5% down. So if you want to buy a house, 0 down, be a vet. If you want to buy a house with 3.5% down, first time home buyer. And if you are dating somebody, I would, and y'all are real serious, I would get her or him to buy a house first, and then you buy a house using 3.5%. So you can pretty much buy 2 houses at 7%, and then y'all get married. And I got 2 houses, just rent out the other one. Word. Actually, I gave that piece of guidance to my brother before he got married. Needless to say, they have 2 houses, right? When they did it. Now they got a few other ones, but that's another story. So, investment property, speaking of which, investment property is going to take a little more credit to get into investment. Investment houses or investment properties considered a house that you don't live in, 2, 3, 4 units. Commercial loans, like a building or apartment complex, multifamily, is going to be about 620 to about a 650, just depending on the complexity of the deal. But generally, if you're going for, 100-unit apartment complex, that's $3 million, and you need $600,000. You got 600,000 while sitting around, and you buying a $3 million apartment complex at 20% down. I'm sure they figure that you can pay your bills on time because you acquire that kind of money some kind of way. Okay, so let's talk about business acquisitions. So if you wanted to use your credit to buy a business, there's multiple business programs out there, right? A lot of people focus on the SBA because that's just what they know, but there's other programs out there. So I'm gonna kind of go over some of them real quick. So you have a SBA, SBA 7A, and then an SBA 405. SBA standard or SBA flat means that you want to get anywhere up to $350,000. Credit score requirements is a 680. But the down payment is a little more. It's kind of weird. The down payment for under $350,000 is more than over $350,000, which doesn't even make any sense because it's just a different loan program. I don't know. I don't make that up. So a lot of people say, yo, man, I saw this business. It's $300,000. And I'm just like, okay, if you write it up to where you can pay yourself for 2 years. So now instead of, pay yourself $100,000 for 2 years. So now instead of 300,000, now you qualify for 500,000. Now you qualify for a 7A loan, which you have to put 5 or 10% down versus 15 to 20% down. So you put less down, you got more money up front, and you qualify for more loan. Yeah, do that. So that too. So SBA. So you have an SBA 7A, 680, SBA 405. That SBA 7A is 350 to 500,000. Sorry, 350 to $5 million. $5 million, and anything over $5 million, you're in a whole nother program. You don't even go to like the small business. You're not a small business association. $5 million, you're not a small business no more. That's big boy stuff. You go to a world bank or a national bank, and they're gonna want to see everything you got. Because you buying a $5 million business, you're gonna have to put probably $1 million down, and they're gonna loan you a lot of that kind of money. You need to know everything about it and what's going on and that kind of stuff like that. I leave that stuff up for like the big dogs. Most people won't even qualify or even look for that type of stuff. You don't need it. At least now. So you have an SBA 405 program. S405 means you're buying the real estate with the business. So you get the business interest rate. No, you get the real estate interest rate and you get the business down payment. You buy the asset, which is the real estate, and you buy the business at the same time. The cash flow producing asset of the business pays for the real estate. And if you want to put them two into LLCs, you can put the real estate in one, put the business in another, split it up, sell the real estate or sell the business, or split them up and sell them both, or keep them both in two LLCs, or raise the price on one and then charge your business more and the real estate goes up. Go get a refinance on the real estate. And you make money that way. You can damn near make all your money back if you do it right. But hey, what do I know? All right. So next programs for businesses are called microloans. Microloans, you need a 650 credit score, and you can qualify for 50 to 250,000. And you just need a business plan, and you go through your state. The SBA is a national program. Your state has funds that's set aside for businesses too. That's called a microloan. It's from 50,000 to 250. You write a business plan. This is what I want to do with the money. This is how I'm gonna do it. And generally, those aren't for buying businesses. Those are for like people who want to start a business. So, hey, I want to developing this. I want to go in this community. I want to buy this. This is the area I'm gonna put it in. This is how I'm gonna allocate the money. This is how I'm gonna pay you back. This is my 3-year plan or my 2-year plan and my 6-month plan and all that kind of stuff like that. You submit it, boom, bam, boom. You got a 650 credit score, you can go with something like that. And then you have what's called a CDFI loan. A CDFI is a CDFI, sorry. Community Development Funding Investment. I don't know. Community Development is CDFI, Community Development, something, right? Foundation investment or something like that. But they can give you a loan if you want to development of the communities. So that loan is 10,000 to $50,000. So if you wanted to buy a business, no, not buy a business. So say if you wanted to build like a barbershop in like an urban community, you don't even need an LLC for that either. You could just write a business plan and you submit it to your state. And in y'all list, you have what's called CDFI lenders. I'm gonna pull it up real quick if I can find it. So all y'all should have got this. I'm gonna share my screen real quick. So you go and then you fill out you go look at CDFIs, and then you fill out your business plan, and then you say to them, yo, I want to develop this community. I have this how much money I need. They only give you up to like $50,000 though. I want to build a barbershop. I want to build a damn catfish place. I want to build a Jamaican restaurant or whatever, right? It just got to be something to develop urban areas. And then you take those and then you submit them to these people. Here's one in Chicago. Here's one in Boston, wherever. You can submit them to these people and you get the money. And if anybody really want to do it, let me know. We'll talk about it more and we kind of can go from there. Some people say they're easy and some people say they're hard. I don't know. I've never had to do it, but I give you access to it. Right. And then and I'm gonna pull up the micro lenders list. That's the 250. That's the 50 to the $250,000. So every state has a micro lenders list, micro lenders report. So Alabama, Arizona. So he or she right here, doctor is the founder. Here's a loan inquiry. Call Miguel. So Arkansas, California, Colorado, Connecticut, Delaware, Georgia, Florida, Georgia, Hawaii, Idaho, Illinois, Indiana, whatever. Damn, how many they got in California? 20? Colorado, Connecticut. You get the gist, right? Every state has a micro lender in there. So, but you need for the micro lenders again, 650. You submit your business plan to them, and you get the loan that way. If you wanted to do that, and then you can do whatever that with that money, probably whatever you're on your plan. But that's all that story. So let's talk about business credit a little bit, and then we'll press on to something else. So business credit, a lot of people always say, yo, man, I'm trying to get my net 30s, I'm trying to get my net 60, I'm trying to get my NAV score, I'm trying to get my DUNS number, and all the kind of stuff like that. And I'm gonna tell you something, the game has changed. Since 2019, 2020, NAV scores, net 30s, net 60s, net 90s, trade lines, all that stuff don't work. It don't work. Age corps, get age credit, aged LLCs, it don't work. I go live on TikTok a decent amount. I need to go more, but I don't care. People always come on there. What about age corps? What about trade lines? No, this shit don't work out. And then they'll sit there and argue with me in the chat for hours. I don't think you know what you're talking about. All right, you're right. Like, what do you want from me? You want me to sit here and argue with you and tell you that it don't work and you do work? I have a whole funding team that tells me where money comes and where money goes. I have bank managers who call me and tell me what's the latest and greatest in the streets. Ain't none of them talking about no damn trade lines. And none of them talking about no freaking age corps. And damn sure ain't talking about no net 30s, net 60s, and net 90s. On a loan application, if anybody in here has filled out a loan application for a business so we get business line of credit, how often do they say how many net 30s, net 60s, net 90s you got? Or trade line? Or how old is your LLC? I'll wait. Not a damn time. So why are people focusing on it? None. Most people have filled out a business loan application at a bank before. Some people have. If you haven't, it's all good. I'm gonna skip you the damn headache. They don't say shit about no net 30s. They don't say nothing about trade lines. They don't say anything about, oh, you got a Uline account, you got a Granger account. Hey, how old is your LLC? Are you in good standards with your Secretary of State Department? I've gone, I'm good friends with the bank manager at Truist right down the street. I'll go take him lunch and I'll have a conversation with him. He said, yo, man, I got a client in 5 minutes. I said, okay, it's cool. I'm about to get out of here. He said, okay, hold on. Let me look and see if he's in good standards with the Secretary of State. I said, y'all do that? He said, yeah, because if your LLC is expired, then you're not gonna get any loan with us. I said, well, what about age? He said, age rarely plays a factor. If it's over 2 years, you can get more money, but after that, it don't make a difference. 2 years, 1,000 years, don't make a difference. We have funds like allocated for startups because the private sector or business sector, 60 to 65% of all businesses are small businesses. Everybody think it's Walmart and Amazon. No, you drive down the street, you see a shopping center, you see a damn GameStop, a Wingstop, a damn mom and pops laundry cleaner, you see a 24-hour fitness, you see a CC's Pizza, you see all those little ding, 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 next to a Publix or next to a Walmart, right? The Walmart ain't got the damn employees, it's all those damn shopping centers, right? You go to a strip mall, outlet mall, those are all small businesses, right? Do you see a JCPenney's or some shit on the corner? Or you see like the bigger stores, that's 30 to 35% of the market. The mom and pop stores make the fucking world go round. Businesses understand that. The government understand that. I understand that. And a lot of people think, oh man, those people need money. Startups need money. If startups didn't have money, then there would be no 10-year-old businesses. Right? Because lack of capital will smother or kill any business. They need to give money out to the little guys and the medium guys and the high guys. Low guys, 2 years or lower. Medium guys, 2 years or higher. The high guys, 1,500 employees or $5 million or higher. That's what makes it up. And if you want to debate with me, we can take our ass down to the Chase bank manager and you can sit here and tell him the same dumb shit you're telling me on my chat. Hey, bank manager, tell him about the damn net 30s. So I got net 30s. I've been paying on my Uline and my Granger for 6 months. What's my NAV score? And they'll be like, what the fuck is that? And I said, I told him. Say it again. Keep going. Oh, yeah, so I need my NAV score. I got my Payday score, right? And he's like, what's your personal credit? I told him. So, net 30s, net 60s, net 90s, trash. Don't need it. Don't worry about it. If anybody's trying to sell you that crap, it don't work. Right? I do recommend you to get a DUNS number. Every once in a while, they'll ask you if you have a DUNS number. It's almost like it's like your business social security number. But even that, and this was like 3 years ago, they was kind of asking about it. Now I don't even really think they even asked for DUN number. I think Dun and Bradstreet is getting sued by the FTC, Federal Trade Commission. You see what we're doing there? You see how I'm reverting back to older stuff? Federal Trade Commission, the Fair Care Act, the mom and pop of the credit bureaus, Dun and Bradstreet is another bureau, but on the business side, you see what I'm saying? You're learning, man. I got you. So enough of that crap. So last but not least, let's talk about getting you approved and what you should always look for whenever you're thinking about or wanting to go get business lines of credit or any type of credit, right? I don't care if you're trying to buy a house. I don't care if you're trying to get a damn regular credit card or you're trying to get a regular credit card. I don't know if you're trying to get a car or get a house or whatever. You should always check your secret lenders list, which is in your material. And it looks something like this. This is what's called a secret lenders list. Welcome to the secret lenders list. It has a majority of, I ain't gonna say all, I'll say a high majority. Majority, and then sometimes people say stuff like, do they have this bank on it? They'll check it. Damn, it do. What about this one? Yep, it do. What about this? What about this? Yep, it does. And it tells you pretty much the name of the bank, what credit bureau they pull from, and your minimal credit score needed, if at all. So I've seen people that say, yo, man, I got an Experian 700, but I got a TransUnion 620. Okay. So now, if you know that you have a 800 with one score and have a 700 with another, you know where they're going to be pulling from. What kind of card you looking for? I need an American Express. Cool. They're going to pull Experian. You gonna go to Bank of America? Cool. They're gonna pull Equifax. Right? You want this rewards card? Experian 720. Right? And then sometimes they make you do like pay a fee to get in, or you have to deposit money into a savings account with that bank. So if you want to go to BMW, so it talks all of this. It talks about every damn near thing you want. Capital One. I'm not gonna go through all these. I'm not gonna social intelligence, right? Silver One, Experian. You know, Smart Car, CarMax. A lot of stuff. Chase, a lot of Chase cards. If you want to get a Chrysler Credit Union, right? Delta, DirecTV. Let's say if you wanted to get a DirecTV account, right? Where they gonna pull your credit from? Now you're gonna have an inquiry from Equifax, right? Discover Card, which Discover Card is not. They ain't it, man. I don't like Discover at all. But to each their own, right? Hertz. If you wanted to buy a car from Hertz, Home Depot. I'm not gonna search your intelligence, man. I'm not going to read all these, but there's a lot. Victoria's Secret, USA, whatever. It's pretty extensive. So we talked about quite a few things, right? We talked about FTC, Fair Care Act. We talked about the different bureaus, Equifax, TransUnion, and Experian. And we talked about the different things that makes up your credit and your credit profile. We talked about if you wanted to buy a car, credit requirements, buy a house. We talked about different investments. We talked about buying properties. We talked about buying businesses. We talked about different loan programs, CDFI loans. We talked about microloans. We talked about SBA loans. We talked about SBA 405. We talked about SBA 7A. We talked about SBA flats. And then we talked about net 30s, net 90s, net 60s. And then we also talked about the secret lenders list that all y'all should have. I hope y'all found value in this, and I hope that you continue to improve your credit score, because credit is king, and without it, it's going to be hard to get things done. But there are other ways to do it. But I'm an options person. Have all the options you can, because sometimes a deal might need to be work with your credit. And if you ain't got the credit, you're gonna probably be SOL out on some deals. But hope y'all enjoyed this. Thank y'all for watching. Let's get it.